What's up, y'all? Welcome to What the Fuck is Happening with the Fed. I'm Colin Harper, your host, and I'm with CK Snarks of POV Crypto and Bitcoin Magazine. How you doing, man?
Finding safety in sats, y'all.
Hell yeah, man.
And cash. And some gold.
Yeah, man. Stack a little bit of gold, Bitcoiners. I don't care what other Bitcoiners say. It's not a shitcoin. But you want to give a shout out to one of our sponsors, CK?
Yeah, so let's talk about our sponsors. Honestly, I love our sponsors for WTF because they are so damn Bitcoin. The first is Swan Bitcoin, the newest and best way for Americans to stack on the cheap. I just set up actually my weekly dollar cost averages, but essentially they find the absolute cheapest way possible for you to get your sats. They allow you to set reoccurring buys and then allow you to have that Bitcoin withdrawn to your wallet that you custody on your own, either an XPub or just the same address every time. But they are building the onboarding tool for Bitcoiners, and they want to transform as much USD into BTC as possible. You know, they're going to keep their product as simple as possible, and they are going to focus on education. So they already have a side project called Give Bitcoin, which is the easiest way for you to receive Bitcoin as a gift or to give it as a gift. And that comes with educational resources. And their website, swanbitcoin.com, is just absolutely stocked full of great resources. And they are friends with the best in the industry, just putting together good education and focusing on education and cheap ass onboarding. Highly recommend if you live in the US, 49 states, go to swanbitcoin.com, check it out, set up your automatic buys, and start stacking.
And for you cypherpunk Bitcoiners out there, if you haven't checked out BISC yet, you should definitely check out BISC. Now's a good time to stack the dip. I don't know. We might go lower. Maybe we'll go higher. Who knows what Bitcoin's going to do? We're surging right now, I think, as we're recording. So you should download BISC right now. It is Bitcoin's really only true decentralized exchange, and it's run over Tor. They have an order book that matches you with Bitcoiners from all around the world, a bunch of different payment options. You can even send cash through the mail, which is fucking gnarly. That's pretty awesome.
It's the exchange of last resort.
Yeah, it is. It's awesome. I've used it. CK's used it. It's a great way to stack anonymously. And it's a great way to really get your feet wet also with just downloading your own instance of something. If you've never run your own node or anything like that, because whenever you run BISC, you're running your own instance of their software. You're playing a part in their network, and you're playing a part in Bitcoin's network by buying on BISC. So go check them out. Great exchange. Highly recommend. I think we should just go ahead and dive into it, right?
WTF is up with the Fed this week, Colin.
The Fed has been busy. It is establishing repo facilities for foreign banks and foreign central banks now as the international community clambers for dollars. Even as money printer goes brr, they still want the USD, man. And also, U.S. agencies are considering making modifications to the Volcker Rule, which is a rule that mandates that U.S. banks cannot use consumer deposits to fund investing in things like private equities, hedge funds, and other investments. The key point here being that there's still a liquidity crisis, and the Fed is trying to loosen regulations in domestic markets to get more loans and get more liquidity flowing through some of these smaller financial institutions. And in abroad, everyone wants dollars, so the Fed's going to give it to them.
You want a dollar, you get a dollar.
Oh, speaking of that, like the $1,200 that Americans are supposed to get, the news blurb today was it's supposed to happen. They're supposed to be shipped by the end of April at the latest, but it might take as long as 20 weeks. So if you got bills to pay because of Corona, sorry guys. The US dollar is an incredible shit coin. They can't even, just add the $1,200 to people's bank accounts, man. It's all digital dollars anyway. Why does it matter? It's incredible. The inefficiency is baffling.
You need to send them a Corona-infested check.
I mean, honestly, it's dirty as shit. But seriously, think about it. If the US dollar was actually like a shit coin, like think about the US dollar was like Litecoin, right? Or like even like Ethereum or something. There could have been a hard fork already. Just airdrop people, the equivalent sum, whatever, $1,200 worth of Litecoin.
Legacy digital currency tech. Can't even do a proper airdrop.
You can't, man.
All right, well, let's get into this. This is some heavy stuff. I mean, you mentioned direct liquidity deposits for foreign banks. Explain that. What's happening?
They're offering repo. So yeah, so like, short-term loans for the interbank lending market. But they're going to do it directly with central banks as well, which is interesting. I'm not like qualified to talk about that.
Can you re-explain what happened in the repo market in the U.S. briefly, and then kind of explain how that gets applied to non-domestic banks?
In the U.S., the way the repo market works is when banks need to satisfy obligations or payments at the end of a business day, they take short-term loans from other banks to satisfy those obligations. When the liquidity is not there and banks don't have, are charging too high of interest, or they don't want to lend out their cash because they just can't get rid of it, or it's tied up because of regulations, then the Fed steps in and offers those loans at a much lower interest rate. So they're going to be doing the same thing with foreign banks. They're going to be saying, okay, well, we'll give you short-term loans so that you can get dollars into your financial systems. We're going to take whatever collateral you have, and they're just extending the dollar's liquidity across the international financial scene because there's been a flight to the dollar. It's amazing. Even as we continue to print, people still want the dollar. It's still the strongest currency in the world because the Fed is guaranteeing liquidity everywhere. So it's a safety flight right now.
Is the flight to the dollar because the Fed is guaranteeing liquidity, or is it because the dollar is the global reserve currency and the most liquid currency? Like, I see this as a lesson of liquidity. Like, this is why liquidity is so powerful.
Yeah, I think that's definitely liquidity first, obviously. But for the foreign banks especially, isn't it amazing that the thing that is the most liquid is also almost guaranteed at this point by the source? Like, it's like a faucet that never turns off, right? So long as you've got a bucket to keep the water in, you can keep drawing from it. And so that's also incentive for these banks, I believe, and for these financial institutions. I would like to have someone on to talk about the central banks borrowing, because that just means that they're probably going to take those dollars and recycle them through their own economies and their own financial systems. If I had a hunch. But yeah, I mean, this happens just after the Fed's been doing dollar swap lines with banking entities, which I don't know too much about it. It's a forex thing, obviously, but I don't know too much about how that works. But basically, they're opening lines to do business with. I mean, you don't really need to know how these financial tools work to understand that the Fed is playing with house money, so they can do whatever they want with these markets, right? Like they're offering liquidity to markets all across the spectrum: forex markets, central banks, private and investment banks in foreign markets. So I think that's really one of the takeaways here: is it's not just local; it's global.
Is Stephanie Kelton right? Can the U.S. afford anything that is priced in its own currency?
Yeah, they absolutely can. That's the thing, is like MMT. We are living MMT. For our listeners, modern monetary theory is the idea that the government can insure any debt and obligation that it wants to, or pay for any debt and obligation that it wants to.
Specifically, the U.S.
or the EU technically, but the EU doesn't have the purchasing power. Obviously, the US does. But it's basically the idea that as long as you can cover as long as you can cover the printing, and as long as you're making, I guess, smart and savvy decisions about what you're buying or how you're choosing to buy and how you're choosing to use inflation to boost the economy, it can work out long term. But yeah, the United States government can buy anything priced in its currency, absolutely. Or the Federal Reserve can, which is the federal government. And I would love to have, hopefully one day we can have either Joe Weisenthal on or her to talk about MMT, because it's absolutely crucial. Like, this is where we are going. Absolutely. This is the next evolution of Keynesianism, and Bitcoin will coexist alongside of it. And I've been saying this actually for a while, is like, you're going to have state money and you're going to have hard money. And I do believe that people are going to use both in the future, and for different reasons. Because I think that also, this is, I'll end this rant in a second. This is not the last $1,200 check we're going to see in America. We're going to see more. UBI very well could be a thing. Just depends on. And I don't think it's going to be a persistent thing all the time. It's not. We're not always going to have UBI. It's not going to be something in our everyday life. But maybe during times of crisis, that's a new bazooka. That the government could pull out.
I know that in Canada, they're getting substantial relief and they're getting several months worth of checks.
I was actually talking to a miner guy in Canada earlier before this call, and he said that the Canadian dollar is getting hammered right now. But miners are actually doing pretty well because their profits are priced in dollars.
Yeah, BTC and Tether.
Oh, right, man. I mean, stable coins have been popping off, right?
Bitcoin is over 10K if you measure in Canadian dollars. I feel like people need to take into account that Bitcoin is not only up against the dollar. Bitcoin is up against individual fiats.
Yeah, Bitcoin is up against everything, but the dollar is like that's like Zeus, that's like Saturn or something, right? That's like that's the big poppy of all of them. Then the EU is kind of like, I mean, the euro is kind of like the degenerate son, It's kind of doing it, but he's really prodigal and he's really just kind of fucking up. Anyway, I want to kind of launch into talking about this revoking the Volcker rule or potentially modifying it, right? They like to cloak it in this sugary language.
Again, give us the quick intro on the Dodd-Frank Act.
So the Dodd-Frank Act broadly was a bill or was an act that Congress put into place after the 2008 financial crisis. The Volcker rule mandates that banks cannot use customer deposits for investments for profit in things like private equities and hedge funds and other things like that. And the reason for this is before 1990, under Bill Clinton, Glass-Steagall was repealed, banks used to be split up into commercial and investment, where you just have the bank for commercial, so for things like businesses and individuals, and then an investment bank. The banks would actually invest for profit in other things like other ventures or funds, all that stuff. When Glass-Steagall was repealed, then they merged those two. And that's when you have the big monoliths like US Bank, JP Morgan, Citigroup, all that kind of stuff. They're considering modifying the Volcker rule, which would allow banks to take customer deposits and use them for investment purposes and things like hedge funds and private equities, which breaks down a barrier that we've erected twice in regulation. And and the reason they're doing it is because this is part of the reason why there's been such a liquidity crunch even as far back as September in the repo market, because the banks can't make these loans because of regulations. So the Fed and regulators want to break these constraints so that they can free up some liquidity.
So something,
but it means, and one last thing. It's coming just after the Fed said that reserve requirements are null. So banks don't even have any reserves on hand for their customers. So it's one step at a time, It's slowly, but then all at once. What were you going to say?
I was going to say, it sounds like there's a crisis. They put up a rule to protect investors and protect consumers, and another crisis happens, and then they have to remove that rule in order to make the system float, and then rinse and repeat.
I mean, this is, again, going back to, I think, what we said last episode, this is the Ron Paul argument of like the debt cycles that build up and bust every decade. And if you see it, it's happened. It happened in 2000 with the dot-com bubble. It happened in 08 and 09. It's happening now. It's literally every turn of the decade. We'll see what happens. Again, they're just considering revoking it, or not even revoking it, modifying it. But who knows? That could mean anything. So we'll see what they end up doing with it. My hunch is they probably will modify it and allow and free up some liquidity. The other thing we haven't really talked about yet is the unemployment statistics, which is why I think, the first check is not going to be the last. I mean, we had 6.6 million this last week, which is crazy. I mean, we're at 10% now. The Great Depression, when it was at its worst, it was 25?
We're definitely heading in that direction.
And at what point do people stop saying it's a recession and start calling it a depression? Because honestly, it's too early for that now, but I feel like that's where we're headed.
I feel like I'm in a bubble because I'm taken care of and I'm not seeing other people and I'm just in my bubble. But I see all these news stories about unemployment, people graffitiing about not paying rent next month and all this kind of stuff. So it's definitely brewing. It's definitely bubbling.
Yeah, and they think, why should we? Because you see Subway and all these other fucking, fast food joints saying they're not going to pay rent. So why the fuck should anyone have to pay rent? If the Federal Reserve wanted to, they just put a big old freeze on the entire financial system, which would be catastrophic. But I don't think they'll actually do that. But you see stuff like that, and then you see all these corporations getting bailed out, and they think, absolutely, why should I have to do this? And the Fed encouraged banks to make responsible small loans to people right now. That was another thing that they announced. I actually heard someone at the bank earlier today. I was getting some cash from the ATM, a woman saying that she needed a loan to pay her bills. She was hoping Regions was going to give it to her. And that's the state where a lot of the average American is in. We're thinking about month-to-month paychecks,
It's been 1 month, people. In 1 month.
Yeah, it's been 1 month. It's going to get gnarly. It's going to get gnarly in about half a year, man. I mean, I think that's when you're really going to start seeing the ramifications of a lot of, not just what the unemployment and what coronavirus is doing to economies, but what the Fed's intervention is going to do, and especially a year from now, the cost of things, Cantillon effect, inflation, all of that good stuff. I'm interested in the housing market right now. That's the next big thing that I'm going to try to tune into, because I've been seeing a lot of stuff, like a bunch of over leverage, like Airbnb, Superhost, and landlords that can't pay their mortgages because no one's renting. Who would have thought that we're going to get another fucking mortgage crisis, man? We've learned nothing.
Thinking about the over leveraged landlords and specifically Airbnb hosts that are running massive Airbnb businesses, shit is about to hit the fan. And it feels a lot like maybe it's slightly more responsible than 2008, where, strippers were owning 3 homes in Miami. But
I don't know, man. I mean, think about it.
Not the end result is pretty bad.
Yeah.
And it's even more systemic because now it's rich people who are getting effed, because rich people are some of the most over leveraged people out there.
Yeah, for sure. Or it might even be a guy who had 1 home and decided after the financial crisis, when properties were cheap, it's oh wow, 1% interest rate, that's pretty good. Bought a bunch of properties, in New York, Nashville, Denver, San Francisco, you name it, and decided to do that because it was paying pretty good, and in the party cities it was great because tourism was booming. And now there's not going to be any tourism for half a year or a year, and now they're fucked. And it's just the shockwaves haven't even hit yet is the crazy thing. I don't want to sound like too much of an alarmist, but we haven't even begun to see what this is going to do, what it's going to do to just all industries, the Bitcoin industry from all of its aspects included.
I just really wanted to stress though, these are not stupid people making bad mistakes, right? These are really smart business people that were winning. Up until January 2020, these people were winning a lot, right? They were absolutely crushing it. Now we're seeing that people have been misallocating capital the whole time because there's always this chance that a black swan could hit and that, the economy would freeze up and people would need some cash. And no one was saving cash. And now this is the ramifications where everyone is misallocating capital to other things and not saving anything. We are seeing that really come to the forefront.
Yeah, and we're seeing what happens when the Federal Reserve says, okay, we're going to basically guarantee liquidity at this interest rate for years. I mean, the Federal Reserve, we didn't even get above 2.5%. I mean, that's incredible. Interest rates all throughout American history have fluctuated, and they've usually been in the realm of sometimes they've been they've gotten as high as 20%, you go down 10%, things like that. Banks lend to each other at interest rates they feel comfortable with, and the Fed offered interest rates from 0 to 2.5% from 2008 until 2018. That's they ratcheted it up in 2018. I think above 2.5%. To 2.75%, and businesses were able to borrow liquidity so cheaply and just do whatever they want. And they got over leveraged with it. That's what you're seeing in the airline industry. Speaking of that, I want to look at one thing too for today. I want to pull up a chart that a Reddit user made about where the funds are going for the stimulus bill, and I'll post it in the show notes on Twitter as well, because it's fantastic, and I think everyone should read it. The CARES Act is a $2 trillion relief package that gives large corporations $500 billion. Out of those large corporations, out of that $500 billion, there's $58 billion that are going to the airlines, $3 billion of that will go to contractors for employment protection. $4 billion will go to wages and benefits to cargo workers. $25 billion will go to passenger workers' wages and benefits. There's $26 billion that's listed as for other, and $17 billion will go to national security, which I assume has to do with Boeing. $560 billion of this bill will go to individuals in the United States. $300 billion of that will be cash payments, and $260 billion will be extra unemployment payments. $43.7 billion will go to student loans and other, and $153.5 billion goes to public health to fight coronavirus. Or sorry, that's just public health. The coronavirus relief is $274 billion, and it's part of $339 billion that goes to state and local governments. What are you showing me here? Oh, that's a good meme. That's a really good meme.
Describe the meme that you're seeing.
The meme is, it shows a bunch of SWAT team members. It says next month with a RAM, and it says rent, and then behind him are utilities, grocery, healthcare. It sums it up pretty well. Back to the bill. Even like $65 billion goes in like block grants, education stuff, and stuff like that. And there's also a safety net for food banks, child nutrition, SNAP, which is a paltry $26 billion. $500 billion to corporations, $560 billion to individuals, $377 billion to small businesses. New loans, $350 billion, which will be new loans, $10 billion, which will be grants, and $17 billion, which will be relief from existing loans. So, big old relief package. A lot of money getting thrown around, $2 trillion, billions getting thrown all over the place. And yeah, I mean, $560 billion of this goes to the American people, $500 goes to the corporations. You got to bail out the airlines, man. What would we do if we didn't have those airlines that we're not using right now?
Theoretically, without bailing out those corporations, then they'd have to fire all the workers. So aren't they just ensuring that the workers get that paycheck still? Is that what's happening?
I mean, that's true to a point, but also, so look, if the airlines died, it would be painful, right? Because they would have to restructure. But under capital restructuring, when someone else when a private equity firm comes and buys that airline, they're not going to fire all the workers, because that's a headache for them if they fire all those workers, because then they have to reteach they have to go out and do a job hunt, rehire all of them, and then reteach them everything. So they would likely keep the workers. Now, the true thing is like, yes, until that restructuring happened, those workers would be furloughed basically, or unemployed. So in the meantime, so actually, you could make the argument, instead of fucking bailing out the airlines, you just take some of that money, pay the airline workers while the companies get restructured. I'm not saying they necessarily should do that. Maybe that wouldn't be better, but at least that money would be going to the people instead of the corporations. And then the corporations, they fucked up. So they're going bankrupt. They sell their assets. Someone else will buy it up. That's the way a truly free market would work.
Someone with cash.
Yeah, no one's got it. I thought that this flowchart, it's really great. You should check it out. You can find it on Dig. You can also find it on Reddit at r/data is beautiful. It was user 7 and 40.
We'll link it in the show notes.
All right, so I think that about does it. We've gone through the FIMA repo facilities for foreign banks, the consideration to modify the Volcker rule, which would allow banks to use customer deposits on profit investments in private equities and hedge funds. And we also went over the CARES Act, saw where some of that money's going. To round out the episode, I want to look at kind of like looking forward towards what I think is going to be kind of important and newsline or headline worthy for news going forward. First of all, I want to keep track of the unemployment. Like we said in the show, 6.6 million filed for unemployment last week. We'll see what those numbers are next week. And just in general, I kind of want to see what the shockwaves are with the economic shock from coronavirus and America shutting down, and just the financial and economic crisis that's been going on. Kind of see, when is that shockwave really going to be felt, and what are going to be the ramifications, especially in things like the housing market. Like, what's going to happen? How are people going to start defaulting on mortgages, or is the bank going to step in to try to save a cascading default, right? Where just all of these people can't pay their mortgages because they're over leveraged on these properties that they either can't rent out for Airbnb or for actual rentals, things like that. No one just has any cash. I also want to see what's going to happen to some of these department stores. I mean, like the economy is going to shut down for months, and who's going to guarantee some of these? Who's going to guarantee some of these loans, and who's going to guarantee that some of these companies won't go into bankruptcy? I mean, the Fed's shown that it's willing to provide liquidity to a lot of players. How far will it extend its reach? And that's going to really be the big thing, obviously, as we continue this podcast that we're going to be examining.
At what point do we enter pure socialism? Like, I'm just curious, this is, I like the market already doesn't work. Like, we can't allocate capital anymore.
We're already at socialism, baby. Like, I was talking to my grandma the other day. My grandparents and my dad are big Trump supporters. I was like, how do you like that Trump era socialism, baby? Like, that's what it is. That's what the check is. I mean, libertarians always talk about corporate socialism. That's what corporatism is. So we're already there in some regards. It's just like, where are we seeing the money? Another thing coronavirus is going to do and all this Fed stuff, and this is where I'll stop. Universal healthcare is coming. So sorry if you hate it, but just get ready for it. It's coming.
All right, Colin, where can people find you, bro? You got a lot of good stuff.
You guys can find me at As I Lay Hodling on Twitter, and you also find my author page on bitcoinmagazine.com. What about you, CK?
Yep, CK_snarks, doing this show with Colin, doing weekly happy hours, drinks in quarantine on Bitcoin Magazine, Twitter, and YouTube. You can find me also on my personal podcast at POV CryptoPod, where it's the Bitcoin versus Ethereum podcast. So doing a lot of stuff and super excited to continue demystifying what the fuck is happening with the Fed.
Hell yeah, man. So tune in next week, guys, for the third episode. We're also hoping to get some, I don't want to call them mini episodes, but like side episodes where we get some people on. Like I'd really like to get Caitlin Long on. Maybe some, I don't know, like.
Man, we got a wish list. Let's just ask the people, right?
Yeah.
Hey, Dan Tapiero, if you're listening, holler at us.
Yeah, Caitlin Long, if you're listening, holler at us. Travis Kling, and Hans, if you're listening at us, hit us up, please.
Joe Weisenthal, we're looking for the best experts.
Yeah, Joe. You're probably not listening to this, Joe, but if you are, hit us up. Stay safe, stay sane, stay well, take it easy, y'all. Enjoy the weekend. It's going to be the same as the weekday.
A quick reminder that all of the content in this episode is for informational and entertainment purposes only. You should not construe the information as legal, tax, investment, financial, or any other advice. Nothing contained in this presentation constitutes a solicitation, recommendation, or offer by BTC Media, the Let's Talk Bitcoin Podcast Network, or any third-party service provider to buy or sell securities or any other financial instruments. Do your own research.